Hey buddy, Boris speaking for us. Welcome to the weekly technicals for the majors for euro dollar, dollar yen, pound dollar, July 15th to July 19, 2019. Will the dollar rebound as we are now smack dab in the middle of summer doldrums season here in the, I guess, northern hemisphere of the world, with everybody in Europe at the beach, everybody in the US at the beach, and you could really see it in the market action. Market action is very, very quiet. We pretty much have gotten the narrative out of the way at this point. It looks like the Fed is absolutely positively going to cut rates 25 basis points at the end of the month. The bigger question is that just going to be a one and done, or are they really on a path now to continuously and concertedly cutting rates going forward? It's still an open question, but data in front of us isn't going to give us a lot of confidence. We're actually kind of negative data going forward on the US side. There's not going to be much as far as the majors go, as far as data goes, but there still could be, I think, some very interesting stories as the week develops. Keeping in mind, though, that I think we're still very much in a very low volatility environment, and I don't anticipate too much action going on in the markets and over the week as we go forward. That's why the levels actually this week really, despite all of the to and fro, haven't changed much. Euro pretty much, it's edging towards that 113 resistance. But even if it breaks it, that 113, 114 is a massive, massive, massive overhead resistance. I think it's going to be difficult for it to really push higher unless we get some, I honestly, I don't even know if we get some super negative dollar news going forward. Dollar yen, I think, surprisingly weak. It was a big fake out this week because certainly the rate cut is already baked in. In fact, so many rate cuts were baked in that dollar yen had really fallen to a spike low of 106.50 a couple of weeks ago, and we thought that was really going to be the spike bottom. I still think that's very much going to be the operative spike bottom, but now this week I think it needs to hold this 107.50 level. If we're going to see further appreciation in dollar yen and a slow crawl back towards the 109s, we definitely need to see the 107.50. What I think is very surprising, definitely surprising for me, was the fact that U.S. yields went up at the end of the week and dollar yen did not. That divergence really doesn't bode well for bulls like me, and I think it's important to keep an eye on it. So if 107.50 is given, there's going to be more pain in store, and we could really test the 106.50 as we go forward. And then pound really is just a story on Brexit at this point, and honestly, it's screaming by essentially on the idea that a hard Brexit is just not going to be allowed to happen. But there's enough doubt. There's just enough insanity going on in the UK political scene. And Boris Johnson, of course, is a chaos agent equivalent to Donald Trump, that all of this FUD has created a massive one-way move to the downside of the pound. I don't think the market in any serious way, shape, or form is pricing in the prospect of a hard Brexit. But as we get closer, and clearly as negotiations are not moving in any positive direction, there's always this kind of a accidental threat of exit that could possibly happen. I very much doubt it, but nevertheless, buying the pound right now is like buying a very, very sharp falling knife, and you got to be prepared to catch some cuts. Having said this, though, technically it looks like it did make a little bit of a bottom this week. Now into the calendar this week, not a lot of data to move anything in the majors. Actually, let me see. Yeah, this is the start of the week. The primary focus actually is all going to be UK, and primary focus on UK is actually going to be all negative. We have labor data that we're negative on front of the week. We have retail sales in UK at the end of the week that we're going to be negative on, and we have a smattering of PPI and CPI data, none of which is really going to matter because even if it's hot, nobody is really going to care about that. It's really about the UK consumer. My argument actually here is that even if the UK data is negative, it's almost a given. Everybody understands that the closer we get to Brexit, the more disastrous it becomes for the UK economy. And therefore, unless we get just a shockingly bad print, hard to imagine the pound reacting much to fundamental data at this point. It's really all going to be about the political jockeying and where we go as far as the idea of some sort of a negotiated settlement between EU and UK. That's the theme that makes the pound pop. And we're going to be watching that over the next couple of weeks, probably into the fall. On the U.S. side, the central marquee event this week coming up is going to be retail sales, which we are actually negative. It's been a modestly slow month as far as wage growth. weaker retail sales. This is going to be an interesting tell because if retail sales are truly weak, that really will open up the whole narrative of further Fed rate cuts. The theory of the whole thing is we're sort of in this very bizarre US economy where we're hitting all-time highs in the equity market while the economy, although seemingly strong, is actually hobbling along in a quasi-recessionary state. That's very, very hard to believe, I know, if you're not on the ground here. But the actual demand, the actual growth per unit of action in the U.S. economy is it's stagnated significantly over the last couple of months. Manufacturing has really fallen off the cliff. Services have slowed, and when you just kind of look around, it's not that people are going out of business, but there isn't much business being done. You're not really seeing any kind of frenetic sales activity, and that I think is going to be reflected in the retail sales. So that does put a further negative dent to the dollar-yen story and could really test us below the 107.50. That's the one thing I'll be watching for narratively as we go forward. So that's pretty much, I think. Then we also come back with the U of Michigan sentiment survey. Again, I think that will be a minor non-event because it really doesn't matter how the consumer is feeling. What matters much more is what he is spending. And so far, I don't think he's going to be spending much. So it's really UK and US data on the major side to see if we get any kind of color as far as the price action goes. Now, when we look at the charts here, the story is kind of interesting. So first of all, I think what's fascinating about the euro story, if you got a longer term point of view, is just that this is the terminator currency. It refuses to really go down. I mean, we had this massive sell-off, right? It looked like we double topped and this whole positive trend got broken. And yet, a lot of that positivity got healed this week. Because when you're looking at the formation, what you essentially see here is and I know I'm cheating here because we did have a lower low here. But in the grander scheme of things, generally, what you're seeing is a series of higher lows and therefore the uptrend intact. So essentially, if you kind of peel back and look at the euro on a longer term basis, this is a nice rounded bottom. And this nice rounded bottom is still signaling an upward impulse. So the key thing this week is going to be to see, number one, do we clear the 20 SMA through the 1300s? And then much more importantly, obviously, how we're going to trade around there. If we have a couple of days where we hold the 1300, it really puts us in a much stronger position to make a run. Now, making a run towards the 1400s by no means guarantees this is going to be a bust-out trade, but it's going to be the third or the fourth time we test that level. Remember, the more times, it's like a battering ram. The more times the price tests a level, the weaker the resistance becomes, right? So the preponderance of evidence is going to be much more pro-euro than anti-euro if we get up to those levels. But from here to there, there's still plenty of action. There's about 130 pips here, which is a lifetime in FX these days. And that provides us, I think, for scope for a positive tilt as we go into the week. The pound also bottomed out this week. And you can see that what's interesting about the pound actually is that it made a pretty good-looking double bottom off the fat finger lows. This is the front of the year big fat finger lows, if you remember, right after New Year's Day. This is, I think, January 2nd, New Year's Day, when we had that huge flash crash and recovery. And that was actually sort of the spike low that then led us to a very significant rally of about 1,000 pips into the next 3 or 4 months, which we then distributed. And now we had essentially the complete unwind of that rally back down for 1,000 pips, which we've now based. And this is really where we're at. We're basically at a double bottom base here. The breakout here, the pound's got to stretch. It's got to stretch towards that 2600 level, and it does have the headwinds of the data. The thing that could happen here that could be surprising is if the data does surprise to the upside, that certainly provides scope for a little bit of further short covering. But I think irrespective of data here, if we get any kind of just sense that there is political compromise happening in UK, there's a decent chance here that we could clear the SMA. But until and unless we do, there's certainly a risk here for a comeback. But what I will say is that for cable at this point, the retrace back down is probably a buy. You probably have to just kind of operate on the idea here that 24 is the bottom, and any kind of a retrace back down to 24 provides you an opportunity to just buy the dip. If we break it, it's a completely different story. that really essentially says hard Brexit, shock, fear, and a move down to 20 as the market just completely resumes the downward trend. There is an absolute risk of this. Do not, under any circumstance, think that I'm diminishing this risk, but just understand that I think it's not significant right now, and therefore the trade. Basically, you operate with the idea that the trade is a buy, either buy to dip or buy here and a scale down, and just hold a 24 stop. And I think you should be okay for the weekly trade to the upside here. Now, yen, on the other hand, is a very different story. So yen really, I think, certainly killed meat this week in trying to chase. I took this long over here and got completely stopped out on the retrace into the SMA. Having said this, though, if you're a glutton for punishment, to me, the sort of low risk trade here is try to buy the bottom here. If you're in here with like a 107.40 stop, what is the low here actually? Let me just see, what is that low? Yeah, the 107.40. I mean, honestly, if we get to 107.40, the whole thing is busted. But if we can stabilize here, and the market sort of sees, look at the 10-year yield, 213. It's just I think it's insane that we are trading down against a 213 yield when we were like at 2 and we were over here. So there is a massive disconnect, and maybe that disconnect is going to exacerbate. That's why you only give yourself a very, very small opportunity to see if it works. But if it does work, it's an incredibly good risk-reward ratio here. If the thing stabilizes, we have a day or two of trade, I think we have a reasonable chance here to come back, recover the 20 SMA, move back up. It's still going to be churn and burn in the trade, but the bottom line here from a technical point of view as the operating is that the 106.50 was the spike lows. This is consolidation. If we can hold consolidation, that really strengthens the bull's case, and we could possibly make a long but steady climb back up towards the 110s. Sorry for the very, very long dissertation this week on the majors, but it's kind of very interesting. There's a lot of disparate stories. I hope you guys enjoyed it. I wish you guys the best luck, the best trading. Boris, over and out.